Whereas when you're trading those shorter term charts, you need to get out immediately. If it moves against you, there's not any flexibility.
Good afternoon, everybody who is listening. My name is Gav Blacksburg, and I'm the CEO at Wolf Financial. And today I have the pleasure of having on Ben from Pattern Profits. You might have caught us on Twitter Spaces. We regularly do them every Tuesday at 12 p.m. EST with a bunch of charting and technical analysis, riding that fine line between entertainment and education. And we're excited to have you here today. Ben, how's it going?
Good, Gav. How are you?
Living the dream, even after all of our technical difficulties to get started. I'm certainly excited to dig into this one. We've done a number of Twitter Spaces together, but I don't think that we've ever done a separate long-form podcast. So I think this will be pretty fun. For those who haven't already checked out what Ben's doing, you can catch him on Twitter at Pattern Profits. He's a full-time trader. He works closely with TrendSpider as well. He's one of their certified educators. And you can subscribe to him on Twitter to consistently see charts and blog posts and all different types of stuff coming throughout the day. Lots of power scans as well. So Ben, great to have you on. I would love to start out with just a little bit of background. If you want to kind of give a couple minutes on yourself, specifically how you got started in the world of the stock market and Twitter, and we can take it from there.
Yeah, sure. I was in school for PT. That's actually what I went to college for, was physical therapy. But my roommate, he was really involved in the market at the time. This is the late 90s, and the market was really hot. I mean, it was a great market, bull run back then, techstocks.com, the bubble. And really all you needed to do was buy. And I kind of followed his lead, and I don't know where he was getting the ideas from, and I knew nothing about it. But all I knew is we were making a lot of money. It was a lot of fun. And I thought, oh man, this is great, especially for a college kid, having that extra income didn't hurt at all. So then 2000 came and the market crashed and all this. We thought we were geniuses and figured out real quick that we were not. We were just in a bull market where everything went up. So you quickly give back a lot of money. And at that point, I, realized that, if I'm going to do this, I need to figure it out. I need to, kind of understand how the market works and where I'm going to get ideas. And at that time, you went to Barnes and Noble and bought the books off the shelf and read them. And, we didn't have access to all this stuff, that we have today, where you can, speed up that learning curve. So I got into the books, How to Make Money in Stocks, William O'Neill. That was the real first one that kind of started the foundation of understanding, how the market works, understanding the patterns and double bottoms, cup with handles, and understanding the general market too. When we're in a good market, distribution shows we're in a bad market, that stuff. Once I started kind of digging in deep into that, then from there on, it was just kind of developing my own process. And I'd say it took me a good 6 years to really kind of grasp the whole thing and understand what I'm doing and kind of put my own stamp on it. So it was a good 6 years before I was consistent. And then once I kind of got into my routine and developed my own routine and kind of figured out which patterns I liked, to get involved in, then the learning never really stops. But my process, that initial foundation, really hasn't changed much at all since then. So we're going on, like, overall, this is like, 24 years into this now. But even so, you never stop learning. There's always more that you can work on, improve on, and get better at. And that's kind of where I'm at now.
It seems like one of the problems nowadays is that everybody has a different method, right? There's so many approaches. You have a lot of different tools, such as technical analysis. You have, within technical analysis, a million different tools, right? And all these different indicators you can throw on. You've got following the option flow. You have people that read the tape. You have all these different pieces. How do you go about finding the one that you are, most successful with, and then leaning into that and tuning out the other noise?
It may not be just one. It may be a combination. And a lot of times your time frame is what matters most. Because for me, initially, I was a position trader, and what that means is that I'm going to have, several smaller losses, but I'm going to have big gains over 6 months, 9 months, a year, that outweigh, those smaller losses. But if you're a day trader, or if you're a swing trader, different indicators, different, the flow isn't going to matter as much to a longer term investor or position trader as it is to a day trader or swing trader. And when I first started, I didn't know anything about flow, but that's something that later on I said, wow, this really complements what I'm already doing. And I can add this in. Now, there have been a lot of things over the years that I tried to add in that didn't work. And a lot of times that's just trial and error, for the individual trader. But you'll take something, you test it, you add it in. If it helps, define your edge a little bit more, maybe you add it into, to your process. But on the other hand, there is so much noise out there, and there's so many indicators. You definitely can get overload if you try to combine too many things, you want to keep it as simple as possible, but still make sure that you have an edge that's consistent and that you can repeat, regularly. Because if you throw too much information at you, it's really tough to repeat that process, and you get kind of that information overload, or too many indicators where you just get paralyzed. One indicator says it's go time, but you don't have all green lights on all your indicators. So you pause and you end up missing the move. So the simpler you can keep that and just kind of narrow down your focus, the better it is. And I think that takes time, though, because initially you want to, you think everything is that comes at you is going to benefit you or be the next big great thing to add in. And it's usually the exact opposite. Usually when I talk to newer traders, it's like, we got to take more stuff away rather than adding more stuff in, and focus more on price and volume.
Perfect. Yeah, I think that makes a lot of sense. And especially what you were saying there with, if they don't all line up, people will definitely tend to hesitate. And that's where they run into a lot of problems in those areas. Now, let's talk just for a second before we dive deeper into the actual technicals and what indicators you're using. And we'll screen share during that for people that are watching so that they can follow along. Let's just talk about the community side for a second. You're a pretty OG of Twitter. You joined in 2008. Were you using it as a trading community at the time? When did that start happening? When did you start trying to contribute? And were you learning in the early days from other people on Twitter? Were there other greats on there, sharing?
Yeah, when I started really learning, there was no Twitter. It wasn't here yet. I'd say going back to like 2002, 2003, 2004, in that range. But everybody had blogs, and all the really good traders. I'm thinking back to like Jeff Kohler, Option Addict. He's now Trading Addicts, but he had this amazing blog where he would share patterns and watch lists. And I learned a lot from him in the very beginning. And then that kind of transition, once Twitter came, they kind of transitioned from the blogs to Twitter. And now everybody's sharing the stuff that we used to read on the blogs in real time. So it wasn't long before I tried to transition too. And I had a blog at that time, very similar to what I have now. But I was just more sharing general market commentary, not really setups and the stuff you see me sharing now. But yeah, we kind of transitioned from the blogs on the internet to Twitter. And FinTwit, especially initially, was not what it is today. There were only, a few OGs at the time, and they came from the blogs, and nobody had, 10,000, 100,000 followers at the time. But it did transition to being able to go from sharing setups the night before to saying, hey, the XYZ is breaking out right now. Volume is 100% above average. That's how Twitter really changed things in that perspective. And not only that, but you could learn so much faster to see them do it in real time, and kind of how their thought processes were as the market was moving. Yeah, that was kind of a game changer at the time.
Who got you to download Twitter?
So there was a website called Market Guru. It doesn't even exist anymore. But at the time, you would share your trades in real time on Market Guru, and it would track your progress, and it would rank you from the top 1%, top 5%, top 10%, and then everybody else. So as you start to move up that leaderboard, it started sharing that on Twitter. And I happened to be in the top, group there. And I said, I got to see what this Twitter thing is about, because people are saying, why aren't you on Twitter? Why aren't you on Twitter? So it was actually that Market Guru site, which doesn't even exist anymore, that not only got me to share my trade ideas, but also, got me to link up with Twitter. And everybody at that time did the same thing. They all went to Twitter.
Are you trading both commons and options?
Not anymore. Pretty much just common now, unless maybe I'm doing some covered calls, or maybe I'm selling some premium. When I started, and when I had a smaller account, it was definitely options. That was the way to go. But once I got to the point where I could take the strike price and theta and time out of the equation, I switched right away, because with options, you got to get the price right, the strike right, the timing right. Everything really has to line up. And with common, there's definitely a lot more flexibility there. And especially, I'm one of the few that does trade multiple timeframes. So I'll trade, I'll have longer term positions that I plan to hold for 6, 9, 12 months or more, and also be day trading off, a 30-minute chart or even a 5-minute chart, depending on the market. So yeah, eliminating options definitely helped me sleep better at night.
What's the difference between the style you use to approach a 12-month trade versus a 30-minute trade?
So the main approach is you have to be super quick on cutting a loss. When you're in a longer term position, you can give that 5, 8, even 10% of leeway to the downside. And if you get stopped out, you get stopped out. You got to obey that stop loss and take your loss. But that may happen over a period of, it could be days, it could be weeks, before that stop loss is hit. Whereas when you're trading those shorter term charts, you need to get out immediately. If it moves against you, there's not any flexibility. You put in an order, you put in your stop, and you take that stop, and you might only be in the trade 5 minutes, which is why it doesn't really, you don't see a whole lot of day traders sharing their ideas and their trades, because a lot of times you're stopped out before you even could get a tweet out that says, hey, here's what I'm doing. Especially if it's at the open. We see that at the open, that first 10, 15, 20 minutes at the open, that price discovery at the open can shake you out real quick. So I would say that's the biggest difference. And it's more a numbers game for day traders too. If you're keeping your losses at, let's say, 0.5% or 1%, and you're taking your profits at 3 to 5%, you've just got to keep turning that over. Whereas as a position trader, you take a 7% loss, another 7% loss, but then take a 20% gain, you're ahead of the game. The math is completely different, and the decision-making so much faster on day trades.
Wow. So what platform are you trading on?
Thinkorswim.
Okay,
that's the primary platform. Yep.
And how easy is it for you to, what's your process with placing the trade and kind of simultaneously placing the stop? Does it go in right at the same time?
Not usually, because I'm right there. And it also depends on how many things I have on. Like, let's say I put on a position early and it's working like it's supposed to and like I want it to, and I've already bumped up that stop on the initial position. If I'm jumping into another day trade or two, I've got to have stops on those other ones, so that you can't monitor everything if you're in 2 or 3 day trades at a time. You've got to have those stops in. And ideally, initially, let's say it's the first day trade of the day, and maybe I only have 2 or 3 day trade ideas on that watch list. if I'm right there at the computer, I may not put that stop in immediately because I'm watching it on the monitors. But if the kids need something or take the dog for a walk or whatever, you better believe that stop is going to be in before I walk away, from the computer.
Do you use trailing stops ever?
Manually move them up usually, but I won't put in a specific percent and say trail it, 2% below or anything like that. I'll just move it up manually. And what I usually like to see is that maybe there's an intraday flag or a little base or sideways consolidation, and then comes back, above there. Maybe I can move my, stop up to just below that next consolidation or next flag intraday. So I am using a trailing stop, but I'm manually doing that throughout the day.
Awesome. All right, well, let's take a look at some of the indicators in the setups if you want to pull it up on your screen. Yeah, I'll give you a second to do that. And if you want, maybe also just I'm curious how you found TrendSpider and why you decided to utilize TrendSpider as your choice of charting platform.
Yeah, the indicators are there. We had a on Thinkorswim for many years, we had a platform called Profit, Prophet. Many of the old school people will remember that platform, and that's what I was using. And Tim Knight was the one that founded that, and then it just went away. I don't know what like happened on Thinkorswim, but all of a sudden Profit was gone, and you had no choice but to find an alternative platform or use the actual Thinkorswim platform, which it didn't have all the tools that I really looked for, especially when it came to scanning and a lot of the stuff that I do in after hours. It was a little more complicated to use. So once I found TrendSpider, it didn't take long for me to really dive in and start writing my own scans, my own screens, tinkering with their indicators. And yeah, it's just been a nice fit since.
That's great. That's great. Pretty nice team to work with too.
Absolutely. Customer service, second to none. The group over there, especially in the beginning, anything I had questions on. In fact, at the time, I specifically went to them and said, this is what I need. I need this indicator, which you don't have yet. And like a week later, I got an email that, okay, we've added it. It's there. And I was like, oh, wow, this is great. And at the time I'll tell you, it was fibs. And they only had the auto fibs in the beginning.
Oh,
And I was using fibs in a very specific way. I was testing it with gaps, and I wasn't able to do that. And so I actually reached out. I think it was Jake even that I reached out to and said, Jake, I need fibs that I can place myself, especially when there's a gap and stuff. And the funny thing is, now I hardly ever use that technique at the time. This is going back a few years ago. Because they've given me so many other options to use that once I really kind of added anchored VWAP, I kind of got away from the fibs. So very
interesting. Cool. How does anchored VWAP replace fibs for you? You just found it to be more reliable?
So we had to develop, let me think of one that's relatively recent. I wanted to find that when the bulls and the bears were kind of battling out, and when there was a gap after a power earnings gap is what I call it. That means the stock is up double digits and it's on huge volume. And I wanted to really find a way to where I could really determine who's in control, right? So we see, and I'm just using this as an example because I know this is LRN. You had two of them. You had this power earnings gap back here, and you have this power earnings gap back over here. This is the most recent one. So what I like to do is attach that anchored VWAP to that gap. And then, you initially, and this happens so often, you get this nice run and then it consolidates. Sometimes it consolidates above VWAP, sometimes below. But I don't like to get involved unless it's above VWAP and above the high of that power earnings gap. So if you look more recently, you had the power earnings gap, price kind of danced around it. And when it comes to anchor VWAP, you need the anchor VWAP, especially if you're going to go long, you want to see not only price above, but you want to see it moving higher. You don't want it flat. You definitely don't want it declining. So we tend to get this consolidation around it right here on this candle. You can see that the buyers are back in control. And then it kind of consolidates here. We got a nice little inside day, and I'm just looking for that to come out of there. And now something like this, I'll probably not only take as a day trade, but probably come in with larger size with a plan to swing part and position myself, potentially position myself too, depending on the market.
So would you take this underneath 41.20, or would you wait for it to be over 41.20?
No, I will take this over 40.03. Inside day, you've got this little consolidation. You're above anchored VWAP. Look at how quiet this volume is down here as this consolidated. That's what I love to see. So what I refer to as an anticipatory trade, this is an anticipation breakout. So what I'm anticipating is this is going to get taken out, and it's going to get taken out when this consolidation breaks out. So once we come through that little trend line there, or that inside day comes out over 40.03, I'm going to start I'm definitely coming in as a day trade. And then I'm going to start building that position. If it acts well and it continues to move, I'm probably going to add once, maybe twice, even before the pivot 41.20. And then I'm going to add even more through that pivot if it happens on big volume. And I'll be watching that volume, to see how relative volume is always important. So I'll be watching that volume. Want to make sure that if we move out of this consolidation and definitely through this pivot, it's happening on higher than average volume.
How did you find the stock? Was it a scan?
Yeah, the stock itself came from the earnings gap. So I run a scan to show me what's up double digits. So it's got to be up 10% or more on the day. And the relative volume has to be 300% above average. So you give me that combination, it's going to show up on a scan. Now, that doesn't mean I'm going to jump in right away. Like we had another one on Friday. We had Stone, this one right up against that red line is year to date anchored VWAP, but it met, what I'm looking for. You had a decent gain. Where were we up? We went, I forget how much it was up, but big volume coming in. I want to say it was up like 13% or something like that, but I'm not necessarily ready to jump right into this on day one of that gap. I want to see it consolidate, get anchored VWAP on there for a few days. Does price, stay above anchored VWAP? Is it below anchored VWAP? Is it just kind of dancing around it? So you saw this big gap back here too, and you had a few days and then rolled over. I don't want to get involved in something like that. So I want to give it time. And what I want to see here, I'll show you a great example of one. This is what you really want to see. Let me just move this out for now. This is what we call post-earnings drift. And you get this big breakout, big volume, huge price move. You get this anchored VWAP, doesn't even get tested as this just drifts higher. This is what I'm looking to get involved in. Now, sometimes it may undercut for a few days and then reclaim, but this is the type of move that I want to participate in. And unfortunately, I didn't get in this one only because the average volume coming into this was a little bit light. Like I like at least 300, 400 K a day. And this one was down around 200 K. And oops, because now the average volume's significantly higher.
I see. What's the green, and sometimes it goes to red, wave pattern that you have kind of running through the back?
So the top part of this is the 10-day moving average, and the bottom part of this is a 20-day moving average. And that's a simple moving average for me, but you can adjust this however you need. When the 10-day is above the 20-day, that's green. So the reason I use this is because, as you can see back here, in the old days, if I used a 10-day moving average or 20-day moving average, it was just a line. And a lot of times you'd get stopped out. If you're looking at price at 2 o'clock in the afternoon and it's below that line, you might say, all right, closing below the 20-day, I'm going to exit. What I like to do is now I have an area rather than a single line. So it can keep me in the trade. And like we were just showing with LRN, when the 10-day is below the 20-day, it flips to red. So you kind of expect to act as resistance. And again, going back to sun, like you can see this was kind of trending, and back here too, you had this kind of trend lower, 10 below 20, and it's acting as resistance. And this one above that, that's 50, 65. So it's a 50 simple moving average and 65. So again, it's just creating a shorter term cloud and then a longer term cloud. Now, ideally, something like RCMT, if I was in it at this point, I'm using that 1020 cloud as kind of a guide to let me know whether I want to trim some, take some profit. Like when you get extended from it, there's a good chance it's going to come back in and retest. So maybe I trim some as it gets extended. And then if that 1020 fails, I'm usually looking to that 50-65 moving average below to catch it.
Have you been using, another question. So the candles, what was kind of your choice to the specific type of candle that you use?
So, the traditional candles are what, when I go back in the beginning, I used to use open, high, low, close, because that's basically the bars that they use with IBD. So that's kind of how it started for me with those bars. But then once I started getting into candles, understanding inside days, outside days, what they mean, bullish and bearish patterns, then I really got stuck and hooked on candles. And I've been using that since. Now, I will flip over every once in a while to a raindrop, especially if there's like really an area that I'm like, we're undercutting it, but how much volume was in there? How much were they involved? A lot of times I will flip over to candles, and that's something that's exclusive to TrendSpider. Raindrops. I'll switch over to raindrops from candles to raindrops, especially if there's a specific level. Let me think of one recently that I got one. If there's a specific level that I'm watching, sometimes the raindrop really comes in handy. Back here was really watching for this little trend line to break, and then this, breakout through here. You notice that you kind of get that blue candle there. That kind of tells you that buyers and sellers are in balance. And then on Thursday, we saw this candle. It looked like, if you look at it on regular candles, it didn't push through, right? You see that little descending trend line there, and price came right up to it. But if you switched over to raindrop, you could see that most of the volume was actually above that little trend line. And it's those little details like that that can sometimes make a big difference, because then we did get the breakout, the next day, and I was prepared. So I took this shortly off the open and captured some of that on both a day trade and still have a portion to swing or position in.
You mentioned inside bars, inside candles. Do you use the strat?
I'm not a strat. Like, I've taken portions from the strat that make sense to me and apply them. So a lot of times we'll be looking at similar things and applying it similarly. But I'm too far into the can slim old school approach to be like fully into strat. And like, I do pay attention to a lot of the things, broadening formations, I've developed a system with inside days where I can day trade those on the shorter term timeframes, because I know if I have an inside day on the daily chart, I have a triangle on the 30-minute chart that I can trade. So just like the stratters use the broadening formations to kind of guide entries and exits, I kind of do the same thing, but with inside days. So there are definitely some rules and some things that they've demonstrated and kind of I've learned from that I've been able to apply to my own trading.
I have a couple other questions on stuff that you have set up. So you have the log turned on. What's that do in the top right there?
Yeah, always
Or
log scale versus arithmetic. For me, there's never a reason to turn log scale off. So, and I get asked that a lot. Oh, you use log scale? And yeah, and that's just because especially if you're trading stocks that are lower priced, or if I zoom out a little bit more, you want to see these moves based on their percentage move, and the candles need to make sense. And once you get used to using log for that, it's hard to switch and go back. Like I put it
So
on
what
log.
what is it? What does it change?
So basically you would look, you're now when you're lined up basically here 25, 30, 35, 40, the candles are going to look a little bit different, and you're not going to, it's when you're on log, the percentage gain is going to change as you move up higher in price. So
Now I
what
see. Now I
may
see.
look, yeah, what may look like, oh, it's really extended here on, when you're not on log, when you switch over to log, you go, oh, that move wasn't as, like, look at this candle. That move wasn't quite, it looks like, wow, huge range there, oh, it's a little scary. Well,
Mm.
especially if this started at, say, $6, this candle is going to look even more of a monster. But when you put it on log, you say, oh, now it's relative to the price it's trading at, 40, 44. Not going to look the same as, when it was trading at 10 or 12 or $8. So I
What about
recommend the most to put it on log and just leave it.
what about after hours data?
Every once in a while, I'll turn it on, but for the most part, and again, this is probably because I'm old school, I have it off. Now, every once in a while, if I'm going to take a day trade, especially right off the open or shortly off the open, I'll go ahead and put that after hours data in, because I want to see, how it traded in the morning before the bell rings, and what kind of pattern there may be in the pre-market. I rarely ever look at or pay any attention to what something's doing in the after hours, unless it's an earnings report or some big news or something like that.
And then last question. So you have daily, and then it says versus none.
Yeah,
What's kind of the setup there? I know that that's the multi-time frame
multi-time frame.
analysis, right?
Yeah, if you wanted to compare it to the weekly chart or something like that, you have other indicators on the weekly chart. I don't really use it as much as some do, but it's there. If you wanted to make it a little easier to overlay, what's going on a weekly or monthly chart with that stock, and bring your other indicators over and kind of weigh all that out, you can. But I instead of doing that for me, I'll rather flip over, from daily to weekly and just focus on that one chart. It's very rare that I will try to pull any data or indicators from the multi-time frame onto one, chart.
Got it. Got it. Pretty interesting to see that. And then last question is just what you mentioned, you're trading on different time frames. I see you have the daily on. Why daily over session? And then are you typically going down to like a 65-minute? I know that's a big Brian Shannon thing.
Yeah, I'm more 30-minute. I do occasionally, and some of my scans even run for 65-minute. But when I'm really in there and ready to trade, like you'll see, this is my daily setup. But if we get into my 30-minute setup, it looks completely different. It's different. And let me change the, I use Brian Shannon's same 5-day moving average on the 30-minute. That's,
5-day moving average on the 30-minute. That's like his like key to success, huh?
it absolutely is. And I understand why, having used it enough, but mine is set to actually 33.65. 65 is the 5-day on the 30-minute chart, because that's how many candles you get over a 5-day period. 13 30-minute candles over a 5-day period, that's 65. So that's why you're setting it to 65. Now I also have a little faster moving to make a cloud, because when you're making a cloud, you've got to have two settings. So I use those faster settings. So really, I'm focused on that 5-day moving average, which is the bottom of the blue here, or the top of the red. And you see we found support there. Now, the other things you'll see on my chart here, again, we can thank Brian Shannon for that anchored VWAP. That's a daily anchored VWAP that's TrendSpider puts on there automatically for me each day. That pink one that you see there, that's no matter what I'm looking at, whether it's an index, something like IWO.
How do you get that daily anchored VWAP on there? It's just through indicators?
Yeah, you go to indicators and pick, alpha trends anchored VWAP and then set it to date. That's that D2D. And then this will disappear Monday morning when the bell rings. This will disappear and it will automatically go on to that day, to Monday. So it'll start, and then as
Day
each
to
candle
day.
prints,
Got it.
yep, day
You
to
gotta
day.
love how many different time periods they have for anchored VWAP. It's crazy.
Yeah. And so what else you see on here is opening range. So the yellow is the opening range high, the opening range low. Now for me, when I'm on 30-minute chart, it's going to give me the 30-minute opening range. But if I do zoom in, let's say I zoom into the 5-minute, it's going to give me the 5-minute opening range. See how much more narrow that is? That's the 5-minute candle, and that's the 5-minute opening range. And it didn't take long to figure out Friday. We were in a chop session compared to like last week. Here was your 5-minute opening range, and we just went higher, trend day higher. And that's basically what I'm using this for, is to highlight that for me and point that out to me. So here's your chop day. And then here was your opening range on Thursday. And then just, basically straight up from there on a trend day.
What are the lines above it? White and pink and red?
Sure. So especially when it comes to day trading in individual stocks, I like to know where these are called pivot points. And I like to know where those sit on the individual stock so I can get that through TrendSpider. And this
is that the pivot points daily?
Pivot points daily. Yep. So blue is going to be your pivot point on the day. And then you're going to have above that, you're going to have resistance 1. Pink is resistance 2. That's the one I'm really paying attention to. And then the white up above is R3. That's your third pivot point, acts as resistance. Now you see that actually did act as resistance here, came back in. Then you retested S1 down here. That's that green line right there, and then bounced. So you can see the benefit of that on individual stocks that, this one was actually a little wild on Friday, but it made sense where you came up, tagged R2, came back in, tagged S2, came back in, tagged R1, and then bounced. And by the end of the day, you're back above VWAP. So all of that kind of helps guide, on the session. And normally I'm really focused on the Qs and the S&P, sometimes the IWO if I've got some growth stocks, small cap growth stocks that I'm exposed to. But I always like to be aware, especially S2 and R2. Those are the ones that I really focus on for day trades.
Are they labeled?
They can be, but I just go over here and I have them right here, specifically what are the numbers: 50-44, 52-14, 43-89, 49-39 was pivot. Like those numbers are here. So I'll just, tap on that. I think you can label them. I just haven't done it because as price moves, I don't want them covering my candles.
Is Brian using the 5-day SMA or EMA on that 30-minute time frame?
Brian uses the simple moving average, SMA.
Why would somebody use simple versus exponential in general?
The exponential is going to give more weight to the most recent candles. So most say that it moves a little faster. You don't necessarily need that if you're already on a 30-minute chart or shorter. It's already going to move pretty fast for you, but it can make a big difference. Like if you're a swing trader and you're trading off of the daily chart, the 10 MA is actually a lot slower than the 8 EMA, when you compare those two. So in fact, maybe I can show you. I think I have. So let me just change that 8 EMA. So this can be a big difference. This is white line here is the 8 EMA, whereas the top of the green line is the 10 MA. So there is some space and some room here
Right.
as far as how fast, they move. And if you're a swing trader, you may, and especially in the current market when the VIX is elevated and there's a lot of volatility, you may find that the 10 MA, you're just giving too much back, and the 8 or even the 5 or 6, some people use EMA, may find that works better. So a lot of times, for a position trader though, that's in a trade for the next few weeks or months, you don't want something that moves that fast because it could shake you out. So timeframes play a huge role in that.
Got it. Perfect. Okay, we've got about 5-ish minutes left here, so I just would like to kind of get your thoughts. I know we do this pretty regularly, but current market conditions, just based on where we are, kind of spy the cues. Overall growth has had a pretty large fall for a while here. We got a recent bounce, and now we're a bit of consolidation. We'd just love to kind of get your thoughts on where we are here.
Sure. So, I'll take a look at the S&P first, and this consolidation last week makes sense to me. Got a nice little inside day here. This candle on Thursday really hints to we're going to rip, to the upside. We closed near the highs. We had already consolidated. Then Friday morning got that news, job market, good news is bad news. When we see that the Fed has a green light to continue raising rates. So then we, gap lower, but I don't mind this candle that we got on that news. 410.64 was a level that I got marked. That was the prior low before this run. We ended up closing just below that by 10 cents. But to me, that level is holding. We consolidated. This was a huge run, off of the low. This anchored VWAP from the COVID low. We undercut that, recovered most of that on that day, and we had a nice run last week. Now, to me, it looks like we've just consolidated that. Now we look at 10-20 cloud, just flipped and went green. That means the 10-day is now back above the 20-day moving average. So whether we make another leg higher, 50-65, I think is going to be important above. That 50-day moving average tends to loom large. It tends to be a heavy institutional spot too. So we'll see if we get up there. Do they come in selling and it rolls back over? Or are we able to push through there? I think in short term, you've got an inside day there. So Friday's high was 414.04. You come out over that, I think you're in good shape to get up here. You come out below that, I think you're probably going to test that 10-20 cloud below.
Got it. Well, also, I forgot to ask, what's the kind of the wave formation? What indicator is that called?
So are you talking about this?
When you have
that's MA Clouds by Ripster. Ripster, he's pretty popular on FinTwit. A friend of mine, he really helped kind of put things together for me when he shared this, because you can see back here too. Like if you're just focused on the 10-day moving averages, it's declines right here. You might think, oh, we're back above the 10-day. Maybe get involved, but you're still within that 10-20 cloud and you see how it rolled back over. I love having an area versus a line. So credit to Ripster there. He came up with that. TrendSpider immediately grabbed it, worked with him, put it in, TrendSpider, and I haven't really looked back since.
Perfect. Awesome. I really like it, Ben. So, this was fantastic. Really nice, quick run through, as well as some of what you're using on TrendSpider. I'm using TrendSpider as well. Obviously, we try to teach people different aspects of the platform. Do you use your sidebar at all?
I use a sidebar all the time. Volume by price is the only other one we didn't talk about. I think that's important too, as far as finding areas of support and resistance or confirmation of that. So I'm using it manually, always dragging this. Who has control off of the high? Where's the most volume sit? That's the high there. I lined it up with volume sits, right there. And, they make it easy. TrendSpider makes it easy for us. As far as the sidebar, yes, absolutely. I have a ton of stuff in there. I have actionable ideas. Those are actually sorted by percent change. So anything on my watch list that I'm thinking of getting involved in, I'm going to know right off the open what's acting well, what isn't. I've got seasonality. I'm constantly flipping through that. I use their checklist for the different time frame continuity. This is, the month, the week, the day, the 65-minute. This is where we talked about I do use 65. I definitely use it here. I want to know, are we green or are we red? And are these all lined up? When we're looking on the S&P, we're really only green on the daily right now. Red on the 65 I'm sorry, we're only green on this is a filter for the moving average. We're really only green on that. We're red on the month, on the week, on the day. I also use their unusual options activity. I've just started really digging in to that more, but love that we can see, unusual options activity now, especially as I'm scanning or running through charts. That comes in really handy to be able to see that, just at a glance.
Where's that top left piece coming from? What is that on the sidebar?
This one?
Yeah, what's it called?
Okay, that's full time frame continuity. And I just have a filter in there for a moving average too. But what that is this tells me at a glance, like, let's go to one that's
Is that the smart, is that like the smart checklist?
Smart checklists, right? So as I'm flipping through these, like I can go to on, I can see right away that it's green on the month, green on the week, green on the day, green on the 65. I can flip through my watch list and right away know, what the bigger time frame looks like without ever flipping back over to a monthly or weekly chart. So when I'm day trading and have to move quick, I like to see this all green, so that I know that, and usually I have alerts set too. So that alert set, I usually know this beforehand, but it doesn't hurt to, I'll tell you the main thing that I like, MERS not one, but let me see. I think this one's all green now. What I like to see is something like this. I like to see that I have my trend line, I have my alert set. I noted that the October 50 calls, they were very aggressive in those. I see it coming through the trend line. So I already know the month is green, the week is green, but the day is red or the 65-minute is red, right? And that's what it was back here. But I know as soon as that comes through there, all of this flips to green and we come through that trend line and I get the alert, it's go time. It's time to get in. So that's kind of how I use that checklist. I love to see, especially as I scroll through them, I love to see that the bigger term, the bigger picture, the month and the week, there's got to be another one here, that the month is green. I prefer to see the month and the week green, and the day can be green, but I prefer to see that maybe it's red because I want to catch it as it flips. And that's another one of those strat things where, you want to catch it on the turn.
Well, so I see Ripster.
When it comes through, it's consolidated here. Once it comes through that pivot, I get the alert. All of this should flip to green and it's go time.
Well, I see Ripster follows you, so we'll have to get him on a Twitter space, talk about some of this.
Yeah, he's great. He's fantastic.
We'll make it happen. Awesome. Ben, that's majority of our time for today. Any other final thoughts you'd love to share with, retail or anyone that's kind of interested in using some of these indicators or following along with your journey?
Be patient. Right now is not the healthiest market that we see to be very aggressive, especially if you're a new trader. We get easier markets than this. Let the VIX come down. Let it be a little bit lower. Let volatility come in a little bit. Let growth participate a little bit, because right now, if you're not in energy or coal or ag, it's really, really tough out there. If you are in energy, oil and gas, coal, you might think, wow, I could do this for a living. That's just the market we're in right now. It changes all the time. So if you're struggling right now, I would just say to be patient. It's a difficult market, especially if you're in the growth name, and especially if you're in those former leaders, trying to get involved, in the Rokus and some of those prior leaders. Yeah, rough market right now for that. But it always changes. There's going to be new leaders, and we're going to get, at some point we're going to get into a healthier market. Right now, the Fed is kind of fighting us as far as raising rates. We like to see that the other way around. We like the the Fed to have our backs. So we'll get there eventually, but got to have patience. Cut your losses. The main thing I could tell you, if you're struggling, cut those losses, because you got to stay in the game, for when the deck is hot and the market is stacked in your favor.
Perfect. I love it. Excited to dive into another week when the stock market reopens on Monday. Thank you so much for taking the time to share this with me. I learned a ton, actually. I've added on like 6 different indicators to my screen. I was following along while we were doing it. I hope others, if anybody wants to check it out, you can go and get a massive discount on TrendSpider through either one of our bios. I know that there is a link in my bio for 40% off, so you can check that out. Catch us on Tuesdays. Ben, real pleasure talking with you. Looking forward to the next one.
Always a pleasure, Gav. Always have a good time talking with you.